Good afternoon.
Good afternoon too.
Now, yesterday we did introduction to capital reconstruction. I think we did internal reconstruction. So today we are going to study external reconstruction. We say that reconstruction occurs where companies are facing financial distress or financial difficulties. Now, in external reconstruction, we are supposed to understand what will happen to the books of accounts in that company which is closing down. Because in external reconstruction, one company has to close down and then we open a new company. Basically, in the books of the account, which is called selling company, or the company which is closing down, we must close down the books of the books of accounts of the selling company. Specifically, the assets must be closed down. When you close down the books of accounts of the assets or the assets account in the selling company, you must open the realization account. That is very important. So entry number one, or what you're supposed to do is number one, to close down the assets account of the selling company, you are supposed to credit the assets account and then you debit the realization account. Number two, you are supposed to debit the liabilities account and then you credit that figure in the realization account. Let me ask you a question. I don't know whether you understand. What about the purchase consideration? What are we supposed to do with the purchase consideration?
Debit the purchasing company account, credit realization account.
Yeah, so you credit the realization account and then you debit the purchasing company account. Now, away from that, we also need to consider what about the dissolution expenses incurred. Because in the process of reorganization, there are certain expenses which are incurred, and these are called dissolution expenses and the like. Give me the answer for that.
You debit realization account and credit
So,
banks.
debit realization account and then you credit the bank. Should be credit the bank.
Credit the bank?
Yes. Yeah, you credit the bank because this is money that you are paying. It is coming out of the bank. So you have to credit the bank and then you debit the realization account. So that is correct. Now, away from that, we should understand that by the end of the process, there are certain assets that will not be taken by the purchasing company, but will be taken by other parties. We can sell, that the selling company can sell some of these assets to other parties other than the purchasing company. So what are we supposed to do? In that case, we will not consider the realization account. What are we supposed to do? We credit that particular asset and then we debit the bank because that is money that we are receiving. The same will apply to the liabilities. If liabilities have not been taken by the purchasing company, but they have been paid by the selling company, it means you debit that particular liability and then you credit the bank because you are paying that money. Is it true? So lastly, you have to close the realization account to this account known as sundry members accounts. Sundry members accounts comprises of ordinary share capital members account and preference share holders members account. So by the end of the entire process of capital reorganization, we don't expect to have a balance in the accounts of the selling company. So I think that is the end of our lesson for today. We will pick from there during our online classes. I think you enjoyed the last lesson. So my name is Mr. William, and you can join our classes on online classes, or you call me. My number is 0727 87 10 93. Thank you very much.